Hello and welcome to the CEO1440, the Mortgage Broker Builder Show, where we talk about all things mortgage, real estate, and really just maximizing your 1,440 minutes every single day. We've got a couple of guests here today from V.I.P Mortgage. We're going to talk about wholesale, but we're going to really dive into kind of reverse mortgages, why it's something that today you as a mortgage broker, real estate person kind of really need to understand. And we're just going to have a little conversation around. We're going to have some different questions. And feel free, if you believe that there's a lot of older people that are going to have needs for financing moving forward, I would tell you to stick around and listen to this information. So with that being said, we got Chris Brown and Steve Wolf here from V.I.P Mortgage. And just kind of to dive in here, I'll give a little backstory. I have a lot of brokers that I work with. They're constantly looking at ways like, how can I find one more deal a month or one more deal a quarter? And we keep running into a lot of times, you've got these buy before you sell people. They're looking at different options. They're getting older. They need to downsize. They need to do some different things. And something that I just don't believe I see enough people doing is reverse mortgages. Chris landed someplace. I don't know if it was LinkedIn in my inbox. I don't know how, right? Everybody's out there doing marketing, and AI is supposed to bring me all of my clients for free and close the loan myself. And I just have to sit there, but I haven't figured out how that works yet. So Chris and I met the old school way. Somehow or another, we reached out, we got a conversation kicked off and started talking about it. So Chris, if you want to just kind of kick us off, give us just a quick intro. I know V.I.P Mortgage has been around since 2006. Looks like you guys do a fantastic job on the wholesale side. Your website looks good, trying to help just people across the board. So tell us just a little bit about yourself, V.I.P Mortgage, and the man we really want to is calling us from a cabin deep in the woods in Arizona. So he's there. He's going to kind of shed some light on it. But Chris, give us a little background. What do we need to know?
Yeah, so I do think we connected through some marketing. I think I had you on a weekly mailing list, so which is kind of awesome. But yeah, V.I.P Mortgage, like you said, does a fantastic job wholesale. I think the VIP part is really the big part we pride ourselves on as our service. We're going to offer the full suite of products, so all the conventional first-time home buyer, Fannie, Freddie, VA, FHA, USDA, 184s too. So we do tribal loans as well. So we really pride ourselves on our service more than anything else. Speed, service, consistency, those kind of things. So are huge for us. But yes, we have Steve with us too. So Steve's our expert at VIP. So when it comes to the reverse world, he's really the person that kind of handles the majority of that. So he's been doing those quite a long time, and we kind of default to him with that.
But Steve, so you're in the reverse mortgage space. Tell us a little bit just kind of about what you do there at VIP. And my assumption, I could be dead wrong, but if I want to do and wholesale and bring stuff through, I end up working with an expert like you on the reverse side instead of kind of your traditional account executive. Is that kind of the way that works?
That's how it works. I wanted to thank you for allowing us to be on this podcast today. And I also want to thank Chris for allowing me to partner up with him. I'm talking to a different audience than I normally do. I normally do one-on-one training with loan officers. So if you see me looking down at some notes, I know I'm talking to a different group here. I've been in the mortgage business almost 50 years now. I'm a retired FHA DE underwriter. And for 20 years, I've been a one-trick pony. I just do reverses only. That is all I do. My experience with this product is that it's probably one of the most misunderstood loans that's out there. There's so many myths about this program. In fact, prior to it being taken over by FHA, and that's the HECM program, Home Equity Conversion Mortgage, that's primarily what I'm going to talk about today. FHA took over reverse mortgage nationally in 1989. Prior to that, a lot of people looked at this as a subprime type product. And that's why there's a lot of misconceptions about this. People think they have to give up ownership to do a reverse. They think they will outlive the reverse and have to move or sell. And none of those are true. And I'll hit on the truths as we go through. But not only is it maybe the most misunderstood program that I've encountered, it's also the most regulated. These loans are not difficult loans, but they are completely different. And if a forward loan officer wants to get involved in the reverse mortgage world or space, they've got to kind of rethink the process. They have to rethink how we deal with seniors. The loan is set up to not be a speed loan. There's a certain process that we have to go through. I think one thing, when Chris and I got connected, we both realized that reverses are a great talking point. A lot of people do not understand the product, and it's a way to open conversations. I look at it as a value-added product. If it works, I think the value added is there. And I think if reverses don't work for the client, at least you've opened up that dialogue and perhaps can go back to a traditional forward loan or traditional HELOC. Nearly everybody on this call will probably understand just fine 30-year fixed rate loans, how those loans work. Very few people I've found really understand the reverse from the beginning to the end game, what happens all the way through the process. My suggestion is people that are listening to this podcast either have to get themselves educated in this process, or they have to bring in a partner, a technical advisor, somebody that can answer the questions with them as those questions come about. Generally speaking, I've found, not only in retail but in the wholesale business, you really get one good chance talking to a senior. You've either got to make a connection with that senior on a personal level, or you have to make a connection with that family member that's calling on their behalf. They are skeptical of the program generally when they call. They are reluctant to even make that call. If somebody wants to get involved with these loans, they need to understand you can't do a reverse by email. You can't do a reverse mortgage by text. There's way too many pieces in the puzzle on this loan. The loans do pay well. Okay, the revenue is up to obviously the wholesaler, but the loans pay either really well or they don't pay well at all. And the reason for that is the broker comp is based on the loan advance that we make. If it's a purchase, it can be a significant loan balance when we start out. If it is a borrower that wants to refinance a free and clear property and wants to just put a credit line in place and doesn't want to draw against that credit line, we're going to have an insignificant loan balance at closing, and that's how the broker revenue is set up. 90% of the loans that are done today and they're FHA loans. 90% of the reverses out there are the home equity conversion mortgage. That triggers at the age of 62, and statistically 11,000 seniors a day are turning 62 years of age. The cost to the borrower, the closing costs on this loan, are something that you have to understand, and you have to sell around it, and you've got to do a cost versus benefit calculation. The cost of these loans are between 3 to 5%, depending on how the borrower chooses to take their money. But it's not like we're used to in the forward world, where the costs are based on the loan balance that the borrower takes out. The costs are based on the value of the home. And right up front, FHA charges 2% upfront financed mortgage insurance. And that is on the cost or the value of the home. If it's a $30,000 or $300,000 property, right off the bat, there's a $6,000 fee that goes to FHA for MIP. The benefit I'm going to talk about, but the cost, we've got the FHA MIP, we've got the origination fee, that's how the broker's paid, and then we have typical closing costs, title reports, escrow fees, those type of things. I would strongly suggest, if you're going to enter this world, that you don't go online and try to do the calculations online through these mortgage calculators that are sitting there that all the companies have. We don't have that. But if you go online and you enter the information to see how a reverse mortgage works, you're probably dealing with a little bit dated information, but you're instantly going to enter a marketing portal, and you are going to be bombarded with marketing pieces from that lender. Now, you may want those marketing pieces or not, but the actual access to come up with how we do these loans is an FHA portal that we go to. We enter to find out the math or the algorithms. FHA controls the algorithms on these loans, which is in essence the math. We enter the date of birth of the youngest borrower if they're married, and that typically is over the age of 62. The older the borrower is, the more beneficial the program becomes. But the starting point is 62. If there's a married couple and somebody is 63 and they're married to a 58-year-old spouse, we can work around that. We next enter, the second thing we enter is the value of the property or the purchase price if it's a purchase. The third thing we enter is the loan balance that needs to be paid off if it's a refinance. And the fourth piece that comes into play are the rates. When I started reverses 20 years ago, these were, in essence, in the calculations that we all are used to, these were 60% loan to values with no qualifying required. You fog a mirror, you got the loan if you had the proper equity. That all changed after 2008, after the adjustment took place in the market. Immediately, FHA recalibrated their algorithms, and they took us to a 50% loan. Mathematically, they just said you're not going to be able to get much more than a 50% loan. Then, in the forward world, when interest rates change, payments go up. Obviously, you all know that better than anybody else. In the reverse world, when the rates go up, the equity requirements change. So today, if I'm dealing with somebody, let's say 64 years of age, it's going to be a 35 to 40% LTV. It is a niche, slim market. That will change as interest rates come back down. Knock on wood, hopefully. But back when interest rates were in the 3% on the forward world, we were at 50% loans. We're in the mid sixes now, and that translates into an LTV, age dependent, between 35 and 40% LTV, which means on a purchase, a person has to come in with about 60% down on a purchase to do a loan. And I'm going to explain why that still is a possibility.
Hey, John here, not trying to sell you anything, coming at you with a bunch of hot commission breath. But what this is an FYI, letting you know that we do have a community where we have shared hundreds of posts, hundreds of sales scripts, techniques, tactics, different things to help you grow your business and maximize your 1,440 minutes every day. I'm not sure if it's for you, but it definitely could be for you. So go in there and check it out. CEO1440.com will take you to a place. You can join our free group, give it a sniff test. If you like it, awesome. We've got a lot of other things. We probably would like to sell you something, but right now that's our gift to you. Get in there, check it out. CEO1440 will take you to a place where you can sign up to be part of our free group. Enjoy the rest of the show. Can we stop for 1 second and just kind of back up? So we're way down in the qualifying, like, you know, how they're grossing up Social Security. Like we're way down the rabbit hole on the far end. Can we swing all the way back around? And so what I've got on here is probably a lot of mortgage brokers that are thinking about, is this even a path I want to go down?
Yes.
Right now they're saying, whoa, this Steven guy's been doing this for 50 years and he's scaring the pants off me. I'm not even going to ever do it. So if we can kind of back up, like who would like,
okay,
I'm going to
unscare them real quick. Okay.
Can we just kind of like, you know, you said one thing that like I kind of gleaned out of here, right? Like if I'm a broker that's thinking about this right now and I'm looking at the market as a whole, there's 11,000 seniors every single day that become eligible. Well, Rocket Mortgage is not chasing after them. Maybe they are. I don't know if they still have any affiliation with One Reverse. I was an executive there when they bought One Reverse Mortgage and learned about it. We referred clients back and forth, but so like if I'm a loan officer sitting there today, the 11,000 people coming due, like you said, it's a good conversation starter. People can do purchases here. They can do refis. I know that you can pay a reverse mortgage forward, but if I'm the loan officer sitting out there today, thinking about maybe adding this to my thing, convince me that it's not a terrible idea to do it.
Okay. I think there's two different calibers of wholesale lenders that do reverse mortgages. There's the big guys. Those guys are dealing with experienced loan officers. They don't expect anything from the wholesaler except to buy the finished product. That is from the beginning. VIP is a completely opposite end. We hold the broker's hand all the way through the transaction. Even from the point of all day long, on behalf of the brokers, with the brokers on a conference call or a Zoom call, I will talk with the individual borrowers. I will talk with financial planners. I will be the technical wingman for anybody that wants to start this loan, because there's going to be so many questions that the consumer is going to have, that if the loan officer is just getting started, I don't think it's healthy to say, I got to get back to you. I've got to get back to you. I don't know that answer. If somebody can be brought in and be that wing person for that person on that initial or second phone call to answer those questions about what happens at the end of the loan, how do we get started? That's where VIP specializes in holding the new people's hands as long as they need their hands to be held all the way through. We will do for that loan officer that wants to get started. If I have those 4 pieces of information, I have date of birth, I have value of the property, I have loan balance, the rates populate, I can, in a matter of very short period of time, see if the math works for a reverse mortgage. I think it's really important, John, to not debate the pros and cons of a reverse mortgage if the math or the algorithms don't even work out. I have many people that contact me and they have an 80% loan right now, 80% loan to value. They want to do a reverse. There's no reason to debate whether a reverse is the right product or the wrong product for them, because if they can only get a 40% LTV and they already have an 80% LTV, why dig down deeper on the pros and cons, if that makes sense?
Sure.
But we will do that initial scenario quickly, up front, right personally. We will do it. Once that happens, John, if the math works, the algorithms are a fit, we will then personalize the proposal to that borrower in the broker's name. We will send that proposal to them with instructions on how to get counseled. And I will help with that process as well, because everybody that does a reverse mortgage has got to be counseled by a third party.
Sure.
We'll do the application. We will do the disclosures. We will help order the appraisal. The originating broker needs to accumulate the necessary documentation, Social Security award letters, etc. They push those back to us. We then send that to our underwriting, our closing department. We fund the loan in the broker's name. We, in essence, will hold their hands all the way through the transaction so that they don't trip up, and it gives them the confidence to do this loan.
So they don't have to sign on to become a TPO member. They don't have to sign up with.
They've got to be with
VIP.
They have to be with VIP wholesale division to do this.
Okay, so it's not just sending the 4 pieces. There's a procedure before. So if they're thinking about it, the questions that I get when I mention reverse mortgage, people say, I don't want to do it. I have to get extra bonds. I need to have additional insurance. My E&O insurance is different. It's too much work. It's too big of a pain in the butt. I'm not filling out another set of documents for another wholesaler that's just going to bombard me and try and sell me DSCR loans. Those are the feedback I get. So I guess I'm trying to walk back to not having the qualification piece, right? If they're at 100% and but the mechanism. So if I'm a loan officer,
the mechanism is if Chris would sign somebody up as an approved broker with VIP.
Okay.
There's a process that Chris knows with what documentation has to be presented to get approved to do VIP third-party originations.
Sure.
Once that is done, there is a 1.5-page addendum that says that they would like to participate in reverse mortgages. There is no additional paperwork that's needed. It's just an agreement that they want to sign on to do reverse mortgages. It's very simple, right, Chris?
Yes, it is.
It goes out and comes back the same day.
Yeah.
And Chris, do they need extra, right? I mean, the pushback I get on brokers is it's just another distraction. Is there extra training they have to go through? Is there something that they have to get approved through HUD to be able to talk about these things? Like, is there anything that the actual broker owner, and a lot of times the broker owner is opposed to it, but they've got a loan officer that wants to do it. And so you're trying to grease that wheel to make this, like what I would like them to be able to do at the end of this is forward this to their broker and say, hey, I've been talking about reverse mortgages. I just watched a podcast. I get the help of Wolf. You've seen the movie Pulp Fiction where Wolf comes in and cleans up the body parts. They got their own Wolf. And I'm going to go in. We've got an account executive over there. I think that we can do this. And I've been working with the senior community on some buy before you sell options when mom gets put in the house. Like, I've got a little niche of people that are in their 70s through my church group, whatever, and I want to target them. Anything else special that they need to do other than signing up with you? Any other things that I'm maybe not asking about? Just I'm naive to the whole process. Anything special they need to do to get signed on with V.I.P and be able to push loans back through you? Hey, John here. If you're anything like me, you like to get in, poke around, you like to check things out before you go diving in head deep. We've got a group where you can do that very thing. CEO1440 is a community. We post in there all the time. There's hundreds of different people, a lot of different conversations, and things that you may be able to take away and apply into your business. Now, the guarantee, I can't make you any guarantees. It's not going to 5X your business, but what it might do, it could 5X your business, probably will give you some things that you can tangibly take away and start applying in your business every single day. Everything we post may not be for you, but it definitely could be for you. So check it out. The group's free. Would love to see you in there. CEO1440.com. Enjoy the rest of the show.
No, and if somebody signs up with the intention of doing reverses with us, I mean, really, it's a regular wholesale sign-up process, and then they get the benefit of having that reverse through that addendum with Steve and having him as the expert and those kind of things. So your standard wholesale sign-up process.
Right, but we don't have to have the loan officer get certified. We do
Correct.
not have a formal training that they have to attend. I do training sessions all the time, but in answer to your question, John, they don't have to. They could jump right in and say, Wolf, I've got a senior that I'm going to meet in the office this afternoon. They may have questions. Are you available to chat with them? And I do that. And that's what I think the advantage of V.I.P. We're small, we're quick, we're responsive, and you don't get lost in phone queues. You don't go to voicemail if I can avoid it. I'm around on weekends. I need to be for a starting loan officer or company. They are going to need somebody, and I just use the term, they're going to need a wingman to get them through the first couple, 3 loans, because the terminologies, John, are even different. They call an appraisal a max claim. Don't ask me why, but they do that. They call a loan amount a principal limit. Don't ask me why. I translate that into that. The only thing I'd like to say and then answer further, there is a world of proprietary non-FHA loans that are coming about, that are in a gestation period. FHA's maximum value, where the math is calculated, is $1.2 million and change. So if a property's worth $2 million, they can do an FHA HECM, but the math, the algorithms are going to be capped at the $1.2 million. So we're working at V.I.P. to expand our product mix into non-FHA loans. We call them proprietaries. And there's a soft underbelly there too, because I believe when we get this up and running, the borrowers can be 55 and take advantage of a reverse. But
Yeah,
there's programs out there, and we're fine-tuning our entrance into that world.
I think we occupy a unique time and space right now when you can have so much big data. You can look at 60 million transactions in the matter of hours through computer to see like what actually has defaulted, what's the real lending world look like, and all the Wall Street firms are trying to find their little magic box. Hey, I can do loans to this place. We see it now a lot in like the DSCR space where, insurance, there's big money behind this. So I think it's really neat. I love the things you said, and I can attest to this. The first couple of times you do something, it doesn't matter what it is, whether it's, a 4-year-old learning to ride a bike. It's nice to have your dad holding onto the seat so you don't just crash on your head every time. So the fact that you're there riding along, answering those questions, it's what you need to not, if your goal is to not just stumble the whole way with your client, like having a wingman, as you said it, or having a, somebody to ride shotgun is invaluable. And there are, I mean, right now, I look at just all of the trends that are happening. I mean, a massive amount of the equity in the homes, just across the board, are in the baby boomers. They own all the houses, and there's going to be, I call it a silver streak, where that equity is either they're going to try and find a way to stay, live there longer, do different things. They don't want to run out of money. Like reverse mortgage becomes a very viable solution there. I'm seeing it now all the time. I work with a couple of companies that do like buy before you sell type programs, where we're coming in and seeing a lot of families coming back whose parents were in a reverse mortgage. They've now passed away. They're trying to do something inside of that window that they have from the time mom and dad passes away or goes into senior living. So we're paying off quite a few of these homes. I see it for a mortgage broker that's sitting out there. If this, I think a feasible, a very realistic number could be, an extra 20 grand a quarter. If you just understand this and are having a lot of conversations, like you can find 3-4 more deals, one a month, that's already in, for a lot of people, it's already in their pipeline. It's already in their database. It's already, their real estate agents are already talking about it. And it's just an option they haven't presented.
Right, John, and I'm really careful in that when I'm dealing with this segment of the market is I don't try to sell somebody on a reverse mortgage. I try to educate them, show them the numbers. If the numbers work, and if it's an option that they want to proceed with, we turn them right back to the broker and we start the process. So it's not like there's no pressure, there's no callback. I mean, I don't, the broker is in the driver's seat. But when I talked to 2 financial advisors this morning, they were just happy to get the info. I didn't do a sales number on them because that's not what a reverse is about. Yeah. And the other thing that I think is important is because this is a relationship-driven loan, you don't have the pricing competition that you do on a traditional type of loan. Because if they mesh with you, if you're answering their questions, if you're helping them about what's the end game of this loan, what happens to my heirs, there's some synergy that can be built there that avoids the shop till you drop scenario.
For sure. And you're not selling a commodity. I like the things that you're saying there because it's a lot of what I talk about. The end consumer really wants 3 things. And well, they want one thing and it's comprised of 3 things. They want a little bit of certainty that if they do this, that the process is going to be relatively easy, that they're going to get a fair deal, and that it's not right. And then it's not going to take 17 years. So like as they talk to you, here's the timeline, here's what it looks like. And then you give them the information, and there's a lot of different paths that will get there, but we're in the problem solving business. So you're solving their problem. I did a purchase the other day where we like to do debt consolidation purchases. So it sounds weird. What's a debt consolidation purchase? Well, I have somebody that's got a tremendous amount of equity. They're trying to downsize to get closer to their kids, but they can't afford 2 payments. Interest rates are way higher today. So instead of putting a massive amount down, we did a loan amount where at the purchase, we're paying off all their debt to get their payments to be more comfortable, right? So that was a very viable option. It was, you consolidate debt while you're doing the purchase. And, that solved the problem. And that's the business that we're in today. It's not interest rates. It's not a 30-year fix versus a 15. It's what kind of payment can you handle? What does your lifestyle require? What do you need? Like in your case, sometimes you give people a lump sum. Sometimes you're augmenting income. So many cool things that can happen there.
The other thing is that we don't have the traditional debt to income ratios. We basically work off of VA residual, that model. We also don't have, we're not credit score driven. I mean, that's amazing that we're not credit score driven. We do have to look back. There's a 24-month look back in terms of how they've handled their credit, mortgage payments, etc. There's even a way to overcome credit if they've stumbled on credit, if they've got the proper equity. So, when you have a loan, the credit score doesn't work and they're older and they've got the equity, look at a reverse, see if that reverse might be a way to help those people. So I think the reverse is a really interesting option. It's a slim market now because the interest rates, what they are, we're at 35
Yeah.
to 40% LTVs, but the volume of people becoming 62, those are the people that have the equity, John, in their homes, just like you mentioned. And even if these people don't want to do something now to create that book of business that when interest rates slide and we can give them a higher loan to value, you reconnect with those people.
Hey, if you're listening to this, quick reminder, we have a free group, CEO1440.com. Jump in there. Tons of posts, tons of information, a lot of stuff we're bringing day in, day out to help you do more with your 1,440 minutes every single day. CEO1440.com. Check it out. Definitely. It's a fantastic conversation starter for anyone. I mean, you have that question, you find out how old they are, and then you ask, right? It's the next question, like, what are you comfortable in a payment? What are you trying to do? One thing that I've often found, and we did this back, we did a lot of refinancing people that were past due or behind, and we would put people like, if you're 68 years old, back when the crash happened, people were able to do reverse mortgages, and people would take a reverse mortgage still with the intent of paying it as a forward. And I think a lot of people don't know that just because you're in a reverse mortgage, you can still pay it and pay it off over a 30-year window the exact same way you could on a normal mortgage.
Absolutely. Yes.
And I think that escapes people. So I like to say and this is, you'll probably tell me I'm crazy, but it's a forward mortgage also with a reverse option, because you can pay it as a forward mortgage. So often, like, to me, it was a way to get people kind of over that hurdle, like, pay it the exact same way if you would want to.
Yeah, I say the same thing that you're saying, but I just call it a payment optional mortgage.
You see, you say it and it sounds good. I say it and it sounds clunky, but
that's because I said it a few times.
Yeah, no, you've got. I felt like I was pretty old in the. Bill Clinton and Monica were in office when I got started here. You were like you were probably like Jimmy Carter. Did you start with?
Yeah, yes.
So you had you had massive lines for gas station and rates at the 18%. So we think we got it bad today.
I've got a 3-digit chums number with DE.
Yeah. He was before credit reports. We got the Wolf here, and Wolf was before credit reports, before they looked at any of the stats for today, right, 76% of all people own homes. Didn't even measure the stat back then. I got an interesting stat that I'll just share with you that you might find pretty unique as you're out there just talking to people, and we look at that 11,000 seniors every day. A lot of these people would fall into that cohort. There was a study done back in 1979 where they took a cohort of people, right? Men, women, all races, creeds, kind of mixed them together. And they looked at this group of people and they put them in this group. And I don't know who did it. You can find it. But they then tracked them from 1979, and it was 15 to 22-year-olds. They tracked them through 2016. And did you know that 90.05%, so 9 out of 10 of those people throughout that period of time owned at least one house? So, right, so as you're just walking around, if you think about it, 1,100 seniors a day, probably 90% of them have owned a home at some point because they would fall right into that cohort. So 9 out of 10 of those 11,000 people are probably a potential conversation about a reverse mortgage, even if you bring it up and you bring it up and they say, no, hey, I got a crazy thing. I don't even know if it's an option for you. Have you ever thought of a reverse mortgage? If they say no, boom, just keep walking down your traditional path, but it gave you that one extra thing to not be like the 23-year-old headset jockey someplace that's trying to hard close them on something.
Right.
Yeah, what
I do, John, too, is when someone will talk to me and they'd said, no, my third cousin and my neighbor said reverse mortgages are a bad deal. I said, did they say specifically what the problem was with the reverse mortgage? They very rarely have an answer. It's just that cloud of uncertainty, and people that are not certain don't enter. They step back. And if I can help a company or a loan officer break that little cloud down in a soft educational process, I believe, and I can tell you it does work.
Yeah, and I've been doing this again also long enough to know there have been times in my career where VA loans were terrible, right? It was just the stigma because maybe back, in 1977 or 76, right? Like maybe a VA loan was hard to qualify then. Uncle Lou that was in the, was in the war in Vietnam, like he said VA loans were bad. So we've just been rolling off of what Uncle Lou said in 75. And right, that perception. FHA loans, people hated FHA loans. Well, when the crash happened in '08, like FHA loans now are very commonplace, and you'll hear people all over the place. Now they close just as fast. It's just as easy. It's just there's this legacy of misinformation, or people don't know. And you got Henry Winkler out there, right? That's also going to back to my One Reverse days. We had hired Henry Winkler to be the spokesperson for One Reverse. Who's the Fonz, which I think actually makes it cooler. But I do believe there is just a lot of misinformation. So if somebody's sitting out there and you don't know a lot about, like, let's just say they want some basic info as to whether or not, like, do I want to go down this path? Is this something that I want to try and start focusing on? I think it's a way under-tapped market. Where would you send them just to start?
To me.
Like, just send them over to you, like get with Chris.
Yeah. And I'm jumping in here. They don't have to sign up initially with V.I.P, TPO to get a conversation with me. I am very happy to do that. If they want to start something, we got to get them back to Chris, and we got to get them signed up. It's easy. But if somebody says, I don't know if I want to do this, can you look at this scenario and see if that's even a possibility? I don't resist doing that.
Mm-hmm.
Yeah, I think that's so. Just anybody, often we don't do things in life because we don't understand the process. And just understand anything, the first time you do it, anything, you're going to kind of stink at it, right? People don't do social media because they don't want to feel like an idiot. Just remember when you were young, at some point you stunk at walking. And you'd fall most of the time you tried it. But we all walk today and we're pretty comfortable with it. But it took kind of overcoming that hurdle. And I think that that's a thing that I see personally at holding back a lot of people from maybe, going in and doing the investment property thing or finding, like, trying to niche down into something else, is that they don't want to feel stupid not understanding it. And the one kind of point I would make, when you send at the end of each month, your bank, if you go to your bank right now and you ask your checking account, if it cares whether the money coming in there came from a reverse mortgage, came from a forward mortgage, came from whatever, like, does your bank care where you earn your money? And if your bank doesn't care, then your job should be to go out on the back end, find as many different opportunities to earn more to send into your bank, because it will make your bank happy. So reverse mortgage, if it's not something that you understand, you want your bank account to be a little bit more happy. Our man Wolf here has told us that 11,000 seniors become eligible every single day for this product. And you don't have, Zillow's not out there trying to target them. The Big Red Machine and Rocket, like these big companies aren't out there attacking them every day. You could have a niche where, like, I see it as a great spot. So I think it's really cool what you're doing. So you work with a lot of loan officers. Give me the profile of the loan officer that does, like, I'm sure when you have these conversations, you probably have been doing it long enough to say, this loan officer, like, I'm going to talk to him, I'm going to give him my full spiel, but they're just not going to get it. Like, they don't. What's the profile of the loan officer that you see that does this and does it really well?
They've got to be willing to rethink the process, because we don't run in the same fast track that a forward loan can run in. I'm sure Chris can, how fast can a forward loan go, Chris?
I mean, you can get a CTC technically enclosed within, 8 days. We're seeing about 14 days where we're at here. So 14 to 16.
No, I understand. So a loan officer that wants to close a reverse loan in 14 days is going to be disappointed. This process is a slower process because it's senior oriented. It basically takes a loan officer that's willing to have a conversation personally, not by email, because it will never work trying to answer these questions by email or text. A loan officer that's willing to have a conversation, establish a relationship. It doesn't take a special loan officer, but it takes someone that is willing to rethink and get out of the forward lane if that works for the customer, because it's a different process.
Yeah, can you just walk me quickly through? I know I've worked with a title company that did a lot of business with in the reverse space, and they would actually offer something to their loan officers where they would send a notary out to sign the documents with the client up front, and then would come back in and begin it. Can you just walk me through, like on the customer side? I know that there's like they need to go through some kind of course. Like they have some stuff they have to go through. I think there's some different documents that are signed up. What's just like, not going deep in it, but what does it just look like for the consumer? They sign an application package or?
Okay, for the consumer, the first thing that we do is, and I think every wholesaler does it the same way, but we would send them a formalized proposal with their numbers, quote unquote. In that package is a counseling code. That counseling code is what, when the borrower has to generate a call to a nonprofit FHA counseling agency, the cost of that is generally about $150. The lender cannot pay that. The borrower goes to that counseling by phone. They call up the counselor. It's not like a Jerry Lewis telethon. You don't call and the counselor's sitting there ready to take your call. You call, say you want to be counseled for an FHA HECM loan. They will suggest a time to call you back. That computer code that the borrower gives to the counselor lets the counselor pull up on their laptop the numbers. Okay, so the counselor is seeing those numbers, and the borrower may ask that counselor any questions that they like. The counselor is trying to get a handle on whether these people understand the big picture. Are they competent to at least understand there's going to be an appraisal? They're still going to have to pay their taxes and insurance. It's a very simple 20-minute conversation. The counselor then issues a counseling certification directly to the borrower. It goes to the borrower. If the borrower requests that an email copy go to the lender, it goes to the lender. Once we get, or the broker gets, the counseling certification, we may start the loan application, and we may start the loan application by DocuSign or wet signatures. And if the broker wants to send a notary out to the borrower's house, they can certainly do that. Or DocuSign is a lot of people want to do DocuSign. They don't want to sign 50 pieces of paper. Sure. Then once that happens, they're given a list of documents from the broker that we help with. Here's what you need to get back with us: your Social Security benefit letter, a copy of your Social Security card if you have one, and we have options. Most of the borrowers are on very limited income. Most of them are on Social Security. And because we use VA residual, unless they're terribly over indebted, the qualifying process is fairly easy. It's the equity that we've got to have to make the train run.
I didn't know.
Once the documentation comes back, pushed back to us from the broker, it's immediately submitted to underwriting. We get a clear to close. We close in the broker's name. We can go back out. We can't DocuSign closing docs yet, but the broker could certainly facilitate that by going out to the borrower's house. One thing I would recommend, you may disagree with me, John, but if somebody's going to start this process out and is going to send a notary out to get the borrower's signatures, they're not going to be happy because they're going to see a stack of 50 places that they got to sign. They're going to have somebody explain those papers to them.
Hey, I want to get a quick message to you here about adding value. And our industry is terrible at telling you, do this, do that. So many people want to add value to you, but value is not in what I give. It's what you receive and whether it makes sense for you or not. We've got a community, CEO1440, where we post every single day, lots of things, sales scripts, a whole plethora of things. So I don't know what particular things are going to add value to you. They probably all won't, but definitely some of them will. The community is free. Would love for you to get in there, sniff around, poke around, and maybe there's more stuff we can do. But I know it starts because if you're anything like me, you like to get in there, check things out on your own before you go and sign up for some large commitment. So get in there, check out our group. I bet that there's something in there and there's little things that you can do that had you known 6 months ago, you'd be making more money today. Join the group. Look forward to seeing you in there. Have a great day and enjoy the rest of the show. I knew a title company that was doing quite a bit of this. And it was one, I didn't know whether you could you could dual track that getting of the cert up front, right? So like, I just didn't know. I knew that they needed to do that education. I just didn't know where that. So
right at the beginning,
hurdle one is you've got to actually get them over that hump and complete it. So that, right, is just, you know.
And they have to take the initiative. We cannot call the counselor on their behalf. They must generate that call. We used to pay for the counseling as an industry, but then some high pressure lenders would call up the borrower and say, we paid your counseling fee, get with it. They started pressuring the borrowers. So the borrower now pays for the cert. The cert is the borrower's.
Is it legal? I guess this may not be your wheelhouse, but could I, if I was going to do this and let's say trying to do it, would it be okay for me to put something incentive in place? Like, hey, here's the link, go in there and do it. Once I get the number back, let me do this, Stephen. Let me take you and your wife out to Olive Garden. When you get done, I'm going to send you a $50 gift certificate for Olive Garden for your time. Is that legal?
I'm not touching that, John. I think so.
Okay.
I think so. I think it's fine. It's not a RESPA deal because you're dealing directly with the customer, but that would be completely up to the broker.
I've found anytime, especially if I'm dealing with older people, if I can get them into the Olive Garden, Big Boy, someplace like that with some free food, a cup of coffee on a Saturday night, like they're into it. So
action.
What's that?
I think it's fine.
Okay.
I think it's fine.
So again, anybody listening, start looking at creative ways. How can I do this? Okay, hurdle number one is I've got to have the conversation. I got to get with Steve. I got to figure out, does this even make sense? Right? Like that's thing number one. I can't do it at a 90 LTV. So, right, it's really low equity people. Step one, you get out this thing. They've got to go through this course. Step two, you get the number. Now you're on to the application documents. DocuSign, however, that's very similar to the mortgage process. Probably the rest of that middle chunk is somewhat similar to the mortgage process as a whole. Title, appraisal, need to verify homeowners insurance.
Right, but we help them with that too. My staff will walk them right through. Here's what you have to do. We also suggest they select a title company that's done these loans before, because these loans close, believe it or not, on HUD-1s. These are not, they're HUD-1 loans. Some title companies don't have the computer capability to do a HUD-1 closing statement. You've got to find a title company that is willing and can still do HUD-1s.
Yeah, I have anybody that's still here. I have a title company that we work with quite a bit that I think does somewhere in the neighborhood of 500 to 1,000 of these a month. So we might be able to point you in a direction there. So super cool. Now it closes, disperses. We're paid as brokers based on whatever would be the initial draw or what they take up front.
Yes.
If they're taking nothing and they're just taking $1,800 a month in perpetuity until they die or whatever, we get paid very little. Is it?
Well, you get the origination fee and very little on the backside.
Okay. So on to the comp part. What is like a standard that somebody, in the forward space, we'll go and set our margin with our wholesaler at, 2.25 or whatever it is. How does it work on the back end on these? Is there still a fixed margin? How does that piece of it work?
Chris, do you want to address the forward part? Then I'll address the reverse, or should I just jump to the reverse?
Just for us, it's the standard comp plan. Like you said, you're selecting anywhere from.
And again, since I'm a one-trick pony, I don't go there on the forward. And every wholesaler, John, may have a different formula, but in our world, we let the broker choose the margin. Okay, the margin will then have a backside yield spread premium based on the utilization. How much money does the borrower want up front? And so there's back-end points, there's a origination fee that's pre-calculated by FHA, and then we take off a processing fee to facilitate the whole thing. The maximum origination fee that FHA allows is $6,000. So
Okay.
at the very least, if you don't start giving away the ship right off the bat, and I don't think a broker needs to do that, even if the borrower doesn't take a lot of money, there's at least $6,000 there less a processing fee. If it's a purchase and it's a big loan amount, there's going to be yield spread premium on the backside plus the origination fee, and it can be quite profitable if the borrower is taking a significant draw or doing a purchase.
So you had said before that, and again, this is right. Like these are questions to have directly with Steve. I'm just trying to get kind of an understanding here. You had said that FHA takes 2% of the value of the house.
Well, on a regular, help me, Chris, on a regular, because I've been out of it so long. If a person's doing a regular FHA forward, what is the MIP?
It's still 1.5, isn't it? Yeah.
It's 1.7. So the up,
Yeah,
so
1.75.
Okay.
that,
But
that's the upfront mortgage
in the
insurance
forward
premium.
world, nobody calls that a closing cost. It's just a presumption that it's going on their loan balance. In the
they finance
reverse
it in.
world, it becomes factored in mentally and mathematically. It's 2%, not of the loan amount, but of the property value.
And there's no, I can, if I just connect what I know on the forward side to the reverse side, that 2% is the same as the upfront mortgage insurance premium. There's no commission. It's not an origination fee where
That's
I'm
correct.
getting a portion. So that's just 2% is just upfront.
On the property value, which is different than a forward.
And then I can charge up to, in addition to that, I can charge up to $6,000 in an origination fee for
And then
like
and then select a margin, and that will create backside
yield
points.
spread. Okay.
Yes.
So in theory, on a $200,000 loan, let's just say, I could collect $6,000 plus whatever I get on the yield spread. I could make $7,500 on that.
Yeah, I would think in this market probably closer to 5 plus the 6.
Okay. So 5 in yield spread plus
Yeah.
the 6 that okay.
Yeah.
So on the forward side, just as a whole, we're capped by like, the world, the governing bodies, nobody will let you really make more than 2.75 on like an FHA, VA, like we're kind of capped all in at like 2.75.
We're not.
Yeah. So, okay. That's one. Good to know. Okay. And what would you say is like, you do a lot of these, what would you say is kind of the standard? What's kind of the average that a loan officer or broker might make per deal? Is it, $7,200? Like kind of what's the market there?
Well, it depends. And because if it's a purchase, there's going to be a significant larger initial draw because of that. Based on the numbers that I see, it's somewhere between 11 and 15,000.
Okay. Good. To know. So probably I would say in the broker space, the normal broker across the U.S. probably making about $5,000 to $7,000.
Understood.
Someplace that's kind of where they have to price themselves to be competitive, to not, not have their realtor partners leave them. So it's probably close to a 2-to-1 ratio here that you do. And do you guys do, like right now, I'm assuming you do a fair amount of purchase business on this product?
It's about 50-50.
50-50?
Yeah. The other thing, and Chris could jump in, I mean, and John, you probably know, I think in the forward world, aren't there a lot of pricing engines that the broker can go to select different lenders and such?
There's all kinds of pricing engines. What happens is there's a sprint to the bottom, and as rates stay higher longer, just people keep cutting and eroding their margin, and they've offset. I think COVID did this, and I might be dead wrong, but if I go back to 20 years ago, originating loans, a lot of it was about service and the quality and what you gave the client, and rate kind of became secondary. What happened with COVID is nobody cared about personalized service anymore. It just became transactional. How many can I bang out? And then you have everything is around the volume, the units, and just going really fast. And it just kept eroding margin. And now you've got brokers that are working out of their basement, and they'll do a loan for $2,500, where because that's $2,500 more than they would have made.
I understand.
And so you have there's a Mack truck difference between what two lenders will do. And Chris can probably tell you, he probably works with people. One guy will do loans for $1,000, and another person's trying. It's a weird, bizarre world we live in
Yeah,
today.
now I don't know if this is the case, but I'm not aware of pricing engines on reverses. That's another thing that's a positive. There may be a pricing engine out there. We don't report to any pricing engine that I know of. It really is much, I think, it's from what I see, it's much less price competitive. It really becomes complete service with these older people.
Well, I like to say right now, I just posted something on social media about making human cool again, right? Like just about being just genuine, authentic, just being a real person, and right, and not trying to compete with the AI and the algorithms. Granted, all that stuff has to be there. So this is super cool, and I know we've been going here for a little bit, and I truly appreciate it. Any big pitfalls or something that somebody, I don't want a broker to come sign up with you, because one of the worst things I think can happen for account executives is you get somebody sign on that never sends you business. Is there, right? Because you just wasted your time on, like spending a lot of time on a girl to take to the prom, and then you never get the date with her. So is there any like pitfalls or things people should think about, like before doing this? Anything?
Yeah,
Just
I
to
can
save
I can
somebody?
give you I can give you. They have the loan officer has to think low loan to values.
Okay.
Why even enter into conversation if it's a 75% LTV that they're trying to refinance? All that does is create a negative in the customer's mind. So all I need, and I think all any reverse lender needs, is a borrower's name, just so we can track it in our system. We don't generate a call to that person, but if I get 4 calls from a broker, I've got to somehow identify those files. If I get a name, date of birth, value of the property estimate, loan balance, we can let a novice getting into this know immediately if this is somebody that is worth pursuing. But and I get calls, John and Chris, every day from a loan officer that will say, I did a VA loan for a guy last year. He's interested in talking about a refinance. That conversation shouldn't even be taking place, because that was probably 100+ % loan.
Yeah.
And we all know that there's not that much equity that's built up. And why even waste? You need to go at another angle with that borrower. But I think it's just getting the basic information and let us show the broker what the math is, and be ready for some false starts, keep positive, and keep throwing them at us. But they've got to think a lot of equity in this market.
And is there anything maybe that, I guess, right, we'll just stay in the lot of equity than trying to say, like, if
35% loan to value today for somebody in their 60s.
And it does fluctuate, right? Somebody in their 80s can get a larger, there's more,
Like
they don't
40,
need
like
as much.
45%.
So
Still low.
essentially, could I use the shower math? Take 100 minus their age is about what their equity position needs to be?
I never thought of it that way, but I think you could. Yeah.
So, right. So somebody that's 62, that would be, they would need to be at 32%.
Yes.
So 100 minus your age is kind of the equity position you need. Anything
And
special?
that will John, that will improve if we get some rate rundown. Because the big factor here that's causing these low loan to values are the rates. Because forward loans, I'm being repetitive, rates go up, P&Is go up. Reverses, higher rates, the equity requirements tighten.
Yeah, and you essentially, for those listening, they will run out of equity sooner, right? They will end up in an upside down situation. And the neat thing too, in a reverse, just so people know, like once you take it, like they're never going to take your house. If you live to be 300 years old, you'll live there for free forever. Correct?
Yep.
So
all they got to do is pay their taxes and insurance.
Yeah. So just right, you can get.
Well, I want to close with one other thing. Before we had this rate run up, I probably, and I was doing retail only at that time, I probably refinanced about 80% of the people that I had originally done a HECM for, because they are older, a couple, 3 years older, but property values escalated so much that we were able to do a heck-em to heck-em refi, give them credit for some of their initial closing costs, and give them access to more money. So there's always the ability, if we would get property run up significant and rate run down significant, we would be able to refinance them and give them more money, heck-em to heck-em.
And is there a streamline?
That's the heck-em to heck-em. That's it.
Okay, I didn't know if you could do heck-em to heck-em.
No, it's not. No, it's not like a traditional streamline. You have to refi.
Got it. Well, I mean, I truly appreciate you guys. We're going on to like the 1 hour mark here, which I try to keep it under that. I think there's just been a lot of great information. So my thing to you would be, depending on what your business model looks like, if you're looking at developing a niche, trying to be unique in your marketplace, your area, your real estate partners, your parents, friends at your church group, every single day, as the Wolf said, 11,000 people are coming of age to be eligible for this program. And I don't think there's very many people going after them. So,
right. And I don't mind. And Chris knows this. I'm saying it right up front. You don't have to be signed up with VIP to have an initial conversation with me and to see how that conversation and how the math goes. If you start to like what we do, it's got to be more formalized through Chris with the addendum. We need to put you in our system. It's like Encompass, but it's called Quantum. That way the docs come out in the broker's name. But I don't mind interfacing with people one-on-one, like the old days, and that's what these loans are. People like one-on-one. They like to know who they're dealing with.
Yeah, so you hit Wolf up on his pager.
Wow, that's old days.
That was funny. I was waiting.
No, I got it. I understood.
I wanted to give it a pause.
No, that's what I had.
I had one too, so it's not that funny. You hit him up, and he'll walk you down the path. Just understand, there's a lot of equity there. This is a conversation starter for a lot of clients, and people want certainty, right? That you're the right person to help them make sure that they get in a good program for them, that you solve their problems, that the payment's affordable. And this, it may not be for every client that you talk to, but it definitely could be for all of them. So every client that's 62 plus, I don't know if it'll work for them, but it could be an option. If you're not presenting them, you're not giving your client everything that's out there.
It's a great value-added talking point.
100%. So I think this has been great. Hopefully a bunch of people reach out. Anybody has questions about how you would market this or sales things on my end, I understand and get that part. Wolf understands, and I'm just calling you the Wolf. Like it's what you are now.
That's what people call me.
Yeah.
That's what people call me.
And I think of the movie Pulp Fiction. Have you seen it?
Yes.
So, right, like he pulls up in his, Ferrari or Lamborghini, and he comes in and he fixes the problem. Like you got problems with the reverse mortgage, you reach out to the Wolf. We probably can get you a theme song and everything. Like I should have brought you out to like.
But I'll be a little more gentle than that guy was.
Yeah. Wow, that's good.
Yeah.
But he knew his stuff either way, how to clean up, blood out of carpeting and whatnot. So all good stuff. Reach out. Wolf's got you. Chris can help you out. We've got a lot of things here, but if you want to do more business, close more loans, and help more people, I believe adding reverse mortgage into your repertoire, put it in your toolbox, I think is something that can definitely
do I have the ability to give out my email and phone number here?
You can give it all out, or it will be in any, go ahead, shout it out. We'll also drop it in the show notes. If someone wants to call me, it's 520, I'm in Arizona, 520-975-1900. You can also get a hold of Chris. He can get a hold of me. I am a phone call return maniac. No one's ever going to say that I do not return my phone calls, right, Chris?
Oh, absolutely. I have to do it every day pretty much. So
yeah, exactly. So, but 520-975-1900. If you want to put my email when you publish this or when you put it out, I'm happy to talk with people about this program. Very happy.
Now we'll put a bunch of stuff out in the show notes and we'll get it out there. But my hope is that more people add this to the mix, that they close a few more loans, and that they take advantage of their 1,440 minutes. And if you're having conversations, it's a great thing to talk about. So I truly appreciate it. I thank you guys. And hey, thanks for your time.
Yeah,
no, I appreciate the opportunity. And Chris, thanks for partnering up with me.
Yeah, thanks, Steve.
Awesome.
Thanks, Wolf.